Hey, everybody. Welcome to Real Talk with Matt. Today, we're going to be talking about non QM and a lot of different options that we have. So make sure you stay tuned to the end and hopefully you learn some nuggets because I've been getting a ton of questions about this. So, what if I told you that you could qualify for a mortgage without having a single tax return? Sounds crazy, right? But for investors and self employed folks, it's 100% possible. And today on Real Talk with Matt, I'm pulling back the curtain on creative financing options that most people don't even know exist. We're talking DSCR loans for investors, and I'm going to dive into what that is. Bank statement loans for self employed borrowers, 1099 only program. So if you're a realtor out there or you work for a company and get a 1099, we have a program for you that's pretty attractive. And a few other creative strategies that could change the way you think about financing on your next property. Stick with me to the end because I'm going to share a nugget that could save thousands of dollars on your next deal. So, welcome to Real Talk. So, the first thing I wanted to talk about today is DSCR loans. So, it stands for debt service coverage ratio. People are like, what the heck is a rent coverage ratio and what is a DSCR loan? It's a really popular product. So, in a nutshell, how it works is you identify a property that you want to buy and how you qualify. We don't use anything for income, we don't use tax returns. So, we could scratch all that out. Typically, you do have to have home ownership of some sort, so be on the title of a property or own your own property. If not, we do have some lenders that will work with us on that. But the advantage of this is when you're investing into a property, it gives you the leverage to not have to worry about your debt to income ratio and other things in that aspect. So, how we qualify you on a DSCR loan for investors is very simple. Appraiser goes to the property, does the appraisal, but they add one thing. It's called a 1007 rent schedule. So what that is the appraiser will determine what the market rent is for that property. So we could either do it on short-term rentals, we could do it on long-term rentals, and whatever that number comes up with. So it's like a market average specific to your property. Obviously on long-term, they use different avenues for that and what is currently already rented. So let's just say, for example, on a property that you're looking to buy, the payment or the rent schedule is $3,000 a month. So to qualify, what do you think your mortgage payment has to be? Higher or lower? Well, the correct answer is lower. So when your payment is lower than the anticipated rent for the schedule, you qualify. It's that easy. Now, in certain situations, property type and value and all that stuff go into play with that. But that's where I come in at Anchor Home Loans, and we work together between borrower and realtor to make sure that we're in a position where it makes sense to do because they can fall apart as well. But if you take that all aside, if you really think about it, being able to buy a property and let's just say you have a lot of assets and you want to invest. We don't need to do your income and W-2s. Now, I'm not saying that doing a conventional loan is any worse or better. Obviously, the terms and the rate might be better on a conventional loan than a DSCR loan because on DSCR loans we do have prepayment penalties if you pay it off soon or refinance or anything within a certain time frame. And obviously, the longer the prepayment penalty, the better the rates are versus a short term. But at the end of the day, it gives people an opportunity to buy a home and not have to worry about their W-2s or what their income is. And that makes it a really, really fun product to do. And I do a lot of these. And the cool thing is, I don't need to have a license to do them in about, I think it's 40 states. So there's a couple of them that you need a license to do it in. So that gives me the ability to help people all across the United States, which is really phenomenal. And I have done. I've done them in Kentucky, Missouri, Ohio, Idaho. I've done them in a bunch of different states I don't have my license for, as like I do need one for a primary or a second home. So here are some of I think the top three bullets on this. Okay. Number one, asset protection. I talk about it a lot. Asset protection is huge. Okay. So asset protection means that if something were to happen to a renter or if you're doing Airbnb, well, you could close these in an LLC. That means at the end of the day, the most that they could come after is that property and not you and all your personal things that you do have. So think about that. That's a big, big win. Now, what I always tell people is that it's important to start early, get that LLC created. It's a couple $100 a year. And once it's approved, then you could get your EIN through the IRS. Okay. So it's important to have that tax ID because with only a few of my lenders, we could actually close it in the LLC and under your tax ID, and you're the personal guarantor of that. So what that does is that allows you to be fully protected and have the asset protection. Also will help you with write-offs and other things like that when you do your tax returns. It also allows you to grow your portfolio faster. So I say this a couple of ways. So a lot of people don't know the max amount of finance properties is typically it's either 9 or 10. I can't remember off the top of my head, but with Fannie or Freddie on a conventional loan, you can only have that many properties. The nice thing with this is there's no limit. A lot of our lenders will go up to 8 units, some of them 10 units. But the pricing is the best in that 1 to 4 range. So 1 to 4 units. We could do condos, non-warrantable condos, condo tells, pretty much you name it, we could do it. Okay. But it allows you to grow your portfolio faster because you're not waiting for specific things such as doing your taxes or do you have enough income, etc. Okay. The other thing is it's really great for Airbnbs or long-term rentals, either one. Between all those different things I talked about, it fits perfectly with that. So with a few of our lenders, we use something called AirDNA, and I could get that data up front. So we know what the data is that we're going to be underwriting to in that situation. So a lot of good things there. So that's a nutshell what a DSCR loan is. I get asked that a lot. So if you're out there and you're kind of thinking like, what does this mean? All it means is that your mortgage payment is covered by the anticipated short-term or long-term rent. Okay. So here's a trick most investors don't know. Even if a property is vacant, some lenders will use market rents from an appraiser's report to help you qualify, which I talked about. That's the rent schedule. Now, if there is a long-term lease already in there, and we can use that as well, but they're always going to use lower of the two, kind of like an appraisal. Same thing. Here's the exciting one. I get all excited about this because this is the majority of my business. Self-employed options. I will tell a quick story. Most of my loans I do for myself are all self-employed, non-QM options. That's where we get into creative financing. So I wanted to hit a couple that are really popular, really just two of them. So we have our bank statement loans and 1099 only programs. So let's talk about the bank statement loans. Typically, there's a lot of people out there that are W-2 and then they go on their own, maybe doing something totally different. And the bank statement loan option is a great lending product. And this is why. When we look at your tax returns for an FHA loan or a conventional loan, they take your adjusted gross income. So that's after all your write-offs up and down. So think about that. If you make $300,000, but you have 200,000 in write-offs, well, your income's only $100,000. In today's world, that's not that much. It may not get you the house that you want. But if you made $300,000, let's just get the calculator out, divide by 12, that's 25,000 a month in income. 25,000. Then we take a haircut, depending on what kind of business you're in. So if you're in the service industry, it might only be a 20% haircut. If you have employees and a lot of goods and expenses, it might be 50%. But we also have some tools, like if your CPA will write a letter saying, hey, listen, Matt's business only really has a 25% expense factor. We could use 75% of the bank statements. I have a couple of these loans right now where they were denied like 400 times. We're in underwriting and almost done, and the rates are really good. So if you have a good down payment, typically on these, you could go as low as 10%. The rates are not great. But if you put 15, 20% down, the rates are sometimes better than a conventional loan. Keep that in mind. Okay. These are great loans where you have a lot of write-offs, but you want to be able to exercise and use all the income that you do have. So I think that's really, really important to know that. Okay. How we qualify you, there's different options. We could either use a 12-month average or a 24-month average. We could use your business bank statements, or we could use your personal bank statements. So either or, but this seems to be a really popular program. The only time it gets like where it's not popular is when you have your first time home buyers and maybe they don't have enough money saved up to get that down payment. But on a lot of these, you could get gifts. All right. So you could get gifts on that. And that definitely helps for sure. So just another thing to look at and another thing to be aware of. And if you're a realtor out there and you have buyers that are self-employed, like I would ask in your discovery phase, when you're talking to clients, like, I think the important parts are credit. What do you do for work? What do you have for assets, et cetera? And then obviously your needs and wants for the house. But if they say self-employed, you got to have kind of like a bing go off in your head and say, wow, okay, we might need to get them with Matt at Anchor Home Loans so that way we can make sure that they're good, either on a conventional loan, FHA loan, a VA loan, a USDA loan, or our creative financing, which is my number one hit. Now, I want to talk about another one that's pretty cool. So, two things with this. So, 1099 only programs. Instead of your full tax returns, we could qualify you with your 1099. So, if you're a realtor for ABC Real Estate and you have a 1099 for, let's use the same sample, $300,000, we would take that $300,000 and usually take a 10% haircut. We would give you $270,000 of yearly income divided by 12. Your income to qualify is $22,500 a month. You could buy any freaking house you want for the most part within reason. I mean, unless you're going into the bazillions, but think about that. And with these, again, same guidelines, usually 10% down is the minimum that you would need to put down. But as you put down more money, the rates get really awesome. So it's another option out there. It's really good for gig workers, contractors, realtors, anybody in that market. Previous to owning my own mortgage company, I was a 1099. I've used this program. It's phenomenal, makes it easy. And the biggest thing I want to say is to people out there is why pay all that money to the IRS and show as much income as you can on your tax returns to maybe get a little lower down payment or a little bit lower rate if that's the case? So think about that. Most people that are making $300, they are at least paying $30,000 to $40,000 in taxes. Well, instead, if you maybe have more write-offs and you're not afraid to write off as much as you can, this is an option for you. So you can write off all the things that you want to, and you can still buy a house, and you could take that $30,000, $40,000 instead of giving it to the IRS. You could give it to yourself in a position of equity. So I want to throw it out there. We also have other creative options. I run into this a bunch with retired people. We do asset-based programs. With those, we could take your total assets and divide them by 60 months, and that's your income that we can add into it. We do bridge loans. It's not super crazy popular, but it is an option. No ratio program. So with the DSCR, going back to that, let's just say the rent schedule totally blows. If you put a little bit more down, usually 25, 30%, we could get around that. I always try to get it an out for my clients just so they understand that, hey, we're going under contract. Do you have these other options at your disposal as far as down payment or maybe doing an interest only for 10 years so we could get to the finish line? One of our preferred lenders who does a lot of QM stuff, that's the normal stuff, conventional and all that, they rolled out non-QM and they offer a really cool program that's a 40-year loan. So 10-year interest only, 30 years amortized. That will knock your payment down big time. And the cool thing with that is no prepayment penalties. However, the cool thing is that when you refinance, because if you think about it, for the first 5, 7 years, you're not really paying any principal down, right? Unless you're making that extra payment. But you're keeping your payments low right now. And if you want to apply a little bit more, that's fine too. But a lot of great products there. So nugget number 2, most people don't realize on bank statement loans, we can sometimes use the business accounts or personal accounts depending on how your cash flows. That flexibility is huge because on the personal account, so let's just say all your money goes to your business, but then you pay yourself in the personal, we could use 100% of those deposits, 100%, which is a big piece. So this is why it matters. Traditional financing isn't one size fits all. Okay. Everyone's so stuck in their head, conventional loan, FHA loan, whatever it might be. And there's a lot of realtors out there and people out there in this industry that we are in that have no clue about all these other products. And people are going to continue to rent. People are going to continue to not buy because of education. That is why I do these podcasts. If you could get a nugget out of it, everyone wins. Okay. And that's probably why I'm so busy and I'm closing 120 to 150 loans a year, is because I do a lot of these ones too. On top of the easy ones. The easy ones are just easy. But these ones, they're easy, but they're fun, right? It's like putting together a Lego set or a puzzle. I love it. It just really pumps me up. And then the fact that we're able to help somebody, it really gains, a lot of momentum for realtors out there who want the diversity of working with a great lender that has all the options. I keep saying this, and I said it this morning, is I don't understand why people limit themselves to a specific point. I could have very easily 6 years ago just stuck to the bananas, the easy stuff, but I've been doing this since the get-go, and now other people are starting to catch on because they're starting to realize, like, hey, this is a big opportunity. I'm like a professional at this. I've done this so many times. I would say probably about, out of the 150 loans I do a year, probably about 50 to 60 of them are these type of loans. So when you're working with somebody like me, you're working with a trusted mortgage loan originator and a trusted company to get your deals to the finish line. If you're a buyer out there, just reach out. I always say DMs are always open. Hit me up, all that good stuff. But one size doesn't fit all at all. Entrepreneurs, investors are our biggest part of the economy. So here in Florida, 65% of, I would say the income and economy here is self-employed people. Think about that. That's a big number. And there's always companies coming in, coming out, people moving here, starting their own company. It's a big, big world to tap into. And I love it. And I work with really good lenders on this. And we do pre-quals up front, make sure everything's good before you put in an offer. And underwriting is typically smooth all the way through. But I specialize in these creative solutions. So I think that's important that you guys know out there that hey, this is my niche. This is my niche. This is what I love to do. But here's the thing. They aren't just for people who can't qualify. We'll say the normal way. Sometimes it's actually smarter financially to use these programs because they protect your strategy, especially with taxes or liabilities, and allows you to leverage your properties differently. That's the biggest thing. Okay. And I would say my message out there to everyone that is out there, if you're a mortgage loan originator, welcome. And, if you want to pick my brain, I'd love to help you because that's what I do. But the biggest thing is you need to be understanding these things and driving these things and educating yourself on these things because they are a great product. And I can't tell you how many deals I've saved because either the builder's lender, no names given, can't figure out anything, or they don't have these products. How many loan originators just say, can't do it? Your tax returns, banks, especially, banks are the worst. They don't do nothing unless you're like the perfect client in the world and the rates are still high. But this is what I do. Okay. Now, I will tell you this. If your credit scores are low, makes things a little wonky because, you got to put more money down, the rates are going to be higher, but typically what I've seen, most of our self-employed buyers are usually in the mid to upper 700s on credit and they have their 10, well, usually 15, 20% down, and it's a great scenario. So just throwing it out there. So whether you're an investor building your portfolio or a self-employed professional looking to build your dream home or find your dream home, there are options beyond the traditional box. And that's the biggest thing is you got to think outside the box. I talk about it all the time. If you want to learn more about DSCR loans, bank statements, or 1099 options, reach out to me and my team at Anchor Home Loans. We'll walk you through it and we'll find the best path forward for your situation because there are 100 different ways to work these things up. And here's the nugget I promise to start. Most people think rates are everything. Okay. And I agree, they are important. But the real money saver is structuring the right loan for your situation. And that's where my clients and your clients are going to win. So I'm going to leave with that. So if you need to reach out to me, you could reach out to me several ways. You could send me a DM on Instagram, Facebook. You could email me, matt@anchorhl.com. You could call me. My office number is 866-245-2025. Or you could get me on the cell, 239-666-5005. And I'm here to answer any questions. I will say this, and I always say this, if you're a realtor out there and you say, wow, I might have a buyer that could qualify, reach out to me. Let's work up some business. Let's work up some strategies. Let's help more people. Let's help more people and get them into their home. So that way they're not renting, or if they're looking to invest, they can build their portfolio. So it's been real, guys. Real Talk with Matt. Thank you for hanging out with me today, and I'll see you next time.